Hello, everyone. Thanks for joining and welcome back. Our guest today is Keith Weiner, founder and CEO of Monetary Metals. Welcome back, Keith.
Hey, Ivan, good to be here. Thanks.
Thank you so much for coming down. Since the last time we've spoke, there's been so many new developments in the silver and gold markets. Looking at silver today, it's $53. Gold at 42.50. Keith, what's happening right now in precious metals? Why do we keep, these new all-time highs, new all-time highs? Does it concern you a bit or no?
It's not getting concerning yet. I mean, the price a little bit. Um, as people who read my writings or watch my videos know, I don't think of gold as going up. I think gold is the lighthouse, the ship, which is the dollar sinking. So relative to the sinking dollar, the lighthouse appears to be going up and up. So I would say the dollar has sunk to 7.5 milligrams, which is somewhat concerning. I mean, what an incredible loss of capital. But there's no backwardation in gold yet. Backwardation is when there's a real scarcity to the market, there's a distrust of the counterparty, particularly the banking system and the clearing system. And we first saw backwardation. Well, there was one day when Gordon Brown was selling half the UK's gold, and then backwardation started to become, serious in fall of 2008 and regularly recurred for a number of years. We haven't seen it in a while, and gold is not backwardated at the moment, but silver is. So backwardation means there's a serious scarcity or shortage to the market,
Hmm.
not of the metal overall. Virtually all gold mined in 5 or 6 thousand years of human history is still in somebody's hands. It's not scarce, and the Bitcoiners will criticize it for that. But scarcity to the market is a whole different thing, whether people are willing to bring it in to get a return. And there's not an issue in gold at the moment, but there is in silver. And so what was happening in silver is as the price was rising, the pattern we saw, certainly post 2011 when the price peaked, is every time the price would go up, two things happened, sure as clockwork or sure as Old Faithful at Yellowstone. Number one, all the silver bugs would say, that's it, rocket ship to the moon, we're taking off. And number two, we'd see a rising basis. Basis as the futures market price minus the spot market price. If that's rising, well, the price is rising, that means that all the bidding action is bidding up futures.
Right.
So you have futures, you have spot, and all the buyers are pushing this up, and the arbitrageurs are pulling this up, but with a lag and with some increasing reluctance. And so the spread is widening as both of them are going up. Okay, so every time that happened, I put out an article, day after day, month after month, year after year during those dark years saying, this isn't, the Jedi mind trick. This isn't the breakout you're looking for. This isn't the moon ship, rocket ship you're looking for.
Right.
The day will come, quoting Aragorn, the day will come when, the price of silver will break $50, but today is not that day. And I think a lot of the silver community called me the perma bear. It turns out I was actually right.
Right.
And so that's an important distinction, and certainly not somebody who's coming at it saying I don't like the metals. It was somebody coming at it saying I don't like the data I'm seeing.
Right. Yeah, no,
So
absolutely.
now we've finally broken 50 in silver, but what's happened, which is very different, right? So people say, is this the same market as XYZ year? No, it's not. What's very different is as the price has been coming up in recent weeks, the silver co-basis, the measure of scarcity as we deem it at Monetary Metals, has been rising.
Okay.
Right? Whereas all those previous times, every blip, you'd see the measure, the basis, the measure of abundance rising, and the co-basis, the measure of scarcity falling every time. So, which makes sense logically. The price goes up, and then some people are tempted to take profits and sell some metal.
Hmm.
Now that has flipped. And now what that means is there's buying action driving the price up. Obviously, that's how prices go up. And that buying action is concentrated in metal, not in futures.
Right.
And what's interesting about that is when people buy futures, that's a short-term trade. There's a real cost of carry in the futures market, number one. And number two, you can play with 20-to-1 leverage. It's dangerous. That's not something you buy and hold and forget for years and come back and hopefully everything's fine because you could be zeroed out with a margin call. So it's a short-term stab in, stab out, take a profit or take a loss and move on. But when people buy metal, you know, many of them are stacking. It goes away. It disappears under floorboards and mattresses and sock drawers and wherever people put, metal.
Right.
And which means that the price move is more likely to be durable and continue to rise. So we have seen a very severe backwardation in the December silver contract. I'm just looking at a graph, which I can share with viewers of this. I just want to pull up the near term one. Hang on a second. I think
Yeah,
it
no
had
worries.
20%. I think the backwardation was 20%. That's right. So what 20% backwardation means, right? So that's annualized. So if you're talking, when did that happen? That peak hit on October 10.
Okay.
So what that means is you could sell your metal, sell your silver at whatever the price was on that day, and buy back a futures contract at a discount, a big enough discount that if you annualized it, right? So October 10 to a December contract, roughly month and a half to 2 months of maturity, annualized would be 20%, or you divide that by six, you're looking at 4 to 5% discount. So in silver, that would be, let's say the price at that time was $48. What 4% of that? Let's see, 48 cents, a couple dollars
Right. Yeah, yeah, a couple dollars.
per ounce. And if you had, a lot of capital to put into that trade, you can make some serious money or serious dollars anyway.
Right.
Now, what's notable about this is anybody with metal can enter that trade, right? So you just,
Hmm.
you sell your metal and you buy a futures contract. There's no risk as measured in the conventional sense because you have the cash. There's not going to be a margin call. You're 100%. You just sold the metal for whatever, $1 million, let's say. Now you're going to buy $1 million worth of futures contract and plan to take delivery. Like you're not going to go wrong. In
Right,
the
right.
conventional sense, there's no risk. And yet, watching that screen, watching that backwardation rise, people aren't taking the trade. And so you have to say, why not? And it's a sign. So you say, am I worried? Not in gold at the moment. Yeah, I mean, a $4,200 price approaching 4,300. That's, concerning in its own right. But in silver, to see that backwardation, something's up. And, it's real. And, this isn't a tariff, driven anomaly. This is something real. And, we'll figure out what it is, I suppose, in the coming days. But there's a real, shortage of silver, and therefore likely higher prices. So yes, there could be a correction. The basis doesn't tell you the price couldn't correct, but it
Right.
tells you that the pressures are in this direction
Right.
as long as that backwardation lasts. So, I was eager to talk about that. I was looking at this data saying, holy bleep, you don't see this. This is an unusual, occurrence.
Where do you think it can go from here, Keith? Like, do you think if it doesn't stop and the backwardation continues in silver, can we see, 60, 70, $80 silver? Like, what do you see right now that could happen?
You could easily see 60 to 65. Now, price targets are a funny thing. At the beginning of the year, I try to, we write a gold market outlook report.
Right.
And I think I've talked about this on your show before. And the risk is I'm sticking my neck out, right? But I'm writing it and it takes a month or more to get all the infographics right and get it all formatted and edited and everything. By the
Hmm.
time it comes out, either it looks like, oh, he's not really predicting anything, it's already come true, or what an idiot, it's already moved against him. But I said we could see 3,600 this year in gold, and if that happens, 37 in silver. Well,
Right.
obviously, both of those targets have been long since taken out. And so, but as you see the data evolving, right? So as price goes up, what's happening to the fundamentals? Then you have to revise the targets and say, okay, well, where do I see from here? Well, we could easily see, 46, 4,700 in gold. And again, if we take those targets out, which, I wouldn't say wouldn't be next week, but I wouldn't say it would. Could be, January, could be whenever. Right now, the market's running, right? So respect the momentum. If you're inclined, first of all, don't short this market. But if you're inclined to short it, I don't think now would be a good moment to do
Right.
that. Then again, don't take my advice on short-term trading because I don't do it and I don't profess to know what the hell's going on. But I see momentum and I see a strong, fundamental. But silver, the question is, let's suppose the price rises to $65. The question is, does it remain as scarce to the market at 65 as it is today at would you say it hit 53? I
Right.
haven't really looked today.
Yeah, it's 53.
Um, 53, or does that higher price begin to draw more metal into the market?
Right, like you'll see a
Um,
flood of people start selling their silver and then it would come into the market.
right, and so that's the question that's very hard, to predict. But right now, I see upward pressure on price, and until that upward pressure is resolved, I see the price is most likely to keep moving, and where it gets, at the end of the day, is interesting, um, but we'll have to see.
Yeah. Hello, my fellow silver and gold stackers. Please hit the like and subscribe button. It will really help the silver and gold community grow. It'll help this channel grow, and I'd really appreciate it. Back to the video. What about the US dollar, Keith? Like there's so much talk recently about, if gold keeps on moving up like this, that's obviously sniffing out something. There's issues with the massive amount of debt that's in the system. What's concerning you right now with the economy, whether it's the US or worldwide or the US debt? What's concerning you right now?
I'd say more. I mean, both. The U.S. government. That's kind of a funny thing. I was talking to somebody earlier today,
Hmm.
and I said, look, it's becoming more obvious that the U.S. government has no way out.
Right.
You can't pay it off, right? I mean, you divide 37 trillion, excuse me, by
That's good.
100 million people working in the private sector, and even if public sector employees are productive, their salary comes from the government, so they can't be net payers on the debt.
Right.
So 100 million people working in the private sector into 37 trillion is $370,000 per working person. If a married couple was working, $740,000 separate, and it's ludicrous, right? I mean, there's no
Yeah.
way
There's no
that can
way.
pay it off. And he said, yeah, but that's not new news. I said, I think what is new news is that the mainstream is seeing it, increasingly seeing it now,
Yeah.
right? So people came to gold in waves. There were a lot of people. Obviously, the gold price was so low in the 1990s. Almost nobody was into gold in 1998, 1999, 2000. But we had the Asian currency crisis. I'm sure that brought a few people to gold. We had long-term capital management. We had obviously crashed in 2001, and ridiculous at that time, ridiculous and unprecedented policy response. And President Bush said everybody should go shopping and buy a house. And anybody who was paying attention to macroeconomics is like, wait, what? That's gonna fix what? How? And so watching them spool out more credit and more debt, and then 2008, a lot of people came to gold post 2008, including myself. I'd never been. I mean, I didn't have the opportunity before that. I was building a software company. I
Right.
didn't have a lot of liquid net worth anyway. It was tied up in a little software company called Diamondware. I think more people came to gold in the wake of COVID and the breathtaking spending bill that proves they care because they called it the CARES Act. So that's how much they care about you.
Right.
Um, and now the debt situation just becomes more intractable. We're going to have lower interest rates, and most people think that the proper policy prescription is higher interest rates. So lower interest rates means, oh, it's getting worse. So I think, yeah, more mainstream people are coming to it. I just read that last week, the Morgan Stanley CIO said the 60-40 portfolio is dead.
Yeah.
60% equities, 40% bonds. Now it's 60-20-20, 20% bonds, 20% gold.
I know that's
Now,
crazy.
you know, for gold people to say 20% in the portfolio, you could have an argument about that. And some people might say that's aggressive. Some people might say it's not enough. A lot of people would say, yeah, 20% feels about right. But what's notable here is not the 20% recommendation in the portfolio. What's notable here is who said it.
Right.
This is Morgan Stanley. This isn't, some gold bug writing an article on, some dank corner of the goldosphere. This is Morgan Stanley
Yeah,
saying
it's
this,
wild.
right? So you have that going on in the U.S. and the rest of the world, largely, and I think I've talked about this on your show before, largely out of fears of their own currencies, which are even worse. I'm looking at you, Turkish lira and Indian rupee and Chinese yuan. I'm looking at you, and not to mention Russian ruble, where people are buying gold to protect themselves, not from the dollar. They'd love to get dollars.
Right.
In fact, I think the advent of these dollar stable coins, that's not going to defund the U.S. banking system. That's going to defund, well, not really pull the cash in nominal terms out of the other banking systems, but it could drive down their currencies in nominal terms quite a lot, as all the peoples of most of the countries of the world crave dollars and fear and loathe their local currency. So now you give them a dollar stable coin, which is easy and everyone can get access to it on the blockchain. And I think they will dump their local currencies and buy those things.
Right.
And then you could see a radical revaluation downwards of things like lira, Brazilian real, South African rand. The list goes on and on. Not to mention Argentinian peso. Through a non-banking channel, it's much harder for governments to control it. We'll see where all that goes.
Right.
And they all buy gold. Right, so in Turkey, 80, 90 million population, there's 100, so the banking system offers gold-denominated bank accounts. You
Wow.
get like a real bank account number, an IBAN, you can transfer gold balances like it's a currency.
Oh,
There's 120 million gold-denominated bank accounts in Turkey for a population of 80 or 90 million.
that's incredible.
So the Turks are with gold bank accounts like Americans are with guns. I mean, there's more than one gun per person, right? Well, they have more than one gold bank account per person.
Right.
In India, per capita GDP is very low. It's $3,000. But 1.4 billion of them may have very low, wages, but 1.4 billion of them all want gold.
Right.
And they all buy gold, even if they can only buy a few grains of it, they do. Americans are much richer, but I think less than 1% of Americans buy gold. So India is a much bigger, gold market than the U.S. For that reason. So the Indians are not buying it to protect themselves against the dollar. That is for sure. They're buying it to protect themselves against the rupee because guess what? The rupee goes down 7 to 9% per year against the dollar, which
Right.
is itself a weak and falling currency. But that's their standard that's their unit of measure is the dollar, and their currency is going down. And so nobody trusts it. Nobody uses it for long-term savings. It's a transactional currency only.
Right.
And so, yeah, that's what's driving all this. Central banks are doing some buying. They're not buying in anywhere near enough quantity to drive the price action. However, their buying may give a lot of other people the impetus to go buy. Well, if the central banks are buying, I should buy.
Mm-hmm.
And that secondary buying of all the people because of central that would be orders of magnitude greater in price effect than what the central banks, themselves are, the effect of their buying would do.
Do you think Morgan Stanley, how they came out and they're saying, sell your bonds and get into gold. Now it's instead of 60/40, it's 60/20/20. Do you think other financial institutions or a lot of other places like Morgan Stanley who are holding a lot of their clients' money are going to follow Morgan Stanley's lead and get into gold? Will that move the price of gold? Because, Morgan Stanley holds a lot of clients' money and they advise a lot of clients. How big of a move is that where they say, it goes from 0% to 20%. How big is that?
That's pretty big. So yes, what we're seeing is institutional players are, trying to figure out and trying to put in place their gold play, whatever that may be, whether that be miners, whether that be a monetary metals account to get yield on it. Some of that's happening.
Right.
Whether that be just buy the bars and stick it in a vault, whether it be some other sort of gold related trade. They can invest in refiners, they can invest in jewelers. Some of the jewelers are public companies. Yes, they are setting up, and I think that's just getting started. I don't think that's behind us. I think that's mostly, ahead of us. And if it's truly going to be 20%, and if that same 20% occurs across all the other big, wealth advisors, whether it's Edward Jones, whether it's, and then the asset managers, the BlackRocks, yeah, it's massive.
Yeah.
Where does the price end up? I mean, I don't, I don't do that kind of, I don't take a straight edge to price charts, and I don't multiply, quantity. Okay, divide by M2. I don't do that,
Right.
but intuitively, yeah, that's a big price move. When and if that happens, and I think it's starting to happen. I think they are all sitting there and saying, we need our gold play. What is our gold play? How
Hmm.
big does it need to be in terms of the size of it, and what exactly, is it going to be? The institutions aren't necessarily. I mean, when someone says, okay, I think gold's going to be, pick a number, 8,000. I don't know. When retail hears that, they think, let me buy the physical metal, and whether they store it at home, whether they open up, a gold account at some gold 2.0 company, or whether they're big enough to maybe open a Brinks account. That's how retail thinks. Institutions think, okay, I want to buy a quality gold linked asset that is gearing to the gold price. So if the gold price is going to double from here to whatever 8,400, let's say, I don't want to park the metal and pay storage fees. I want something that'll have 5 or 10 to 1 gearing, so I'll get a 10 or 20 bagger
Right, right.
out of that double. And so they're gonna look for a smarter play, which doesn't necessarily drive up the price of gold, but it drives up, let's say, the share price of whatever
They put their money
company,
in. Yeah.
whatever they put in, that will suddenly catch a real bid. And whether that's miners, I tend not to think that will be the case.
Hmm.
For a lot of other reasons. But interesting things, I think, are coming in terms of higher prices, and those higher prices are, harbinger of, times are getting worse. This isn't
Yeah.
good for the economy. This isn't good for your fellow American. This isn't good for your safety. Driving that brand new Ferrari you bought because the price of your precious metals went up, you wouldn't want to drive a Ferrari in Caracas, Venezuela,
No.
for example. If you had one, you'd want to hide it. You wouldn't want anybody to know you even had it because they'll kill you.
Yeah.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used. Is just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use, so that instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
Yeah. Yeah, no, it's getting crazy out there, Keith, and I really appreciate you coming down to speaking to the silver and the gold community and everyone in the precious metals community here because I've been speaking to you for years now, and every time it's just you're giving us a wealth of knowledge that we really appreciate. I appreciate. So, where can people connect with you? I'm going to put your links in the description below, but where can they connect with you, Keith?
So, the company website, monetary-metals.com. We pay interest on your gold and silver. So I thought when I founded the company, I was solving one problem, which is the need for real interest on real savings that can compound without the ravages of debasement, inflation, whatever you want to call it.
Right.
Turns out we're solving two problems. I hadn't thought of the second one until much more recently, which is when the price is going up. So you bought gold because you said the dollar is going to hell in a handbasket. And it turns out you were right, and the dollar is now halfway to hell at 4,250 an ounce. Yeah, the dollar's already halfway to hell, right? So you were right. How do you profit from being right? Sell the gold and get more of the dollars that you wanted to avoid, and that's why you bought the gold in the first place,
No.
right? So, or put the gold to work, generating 4% yield. So we're solving that problem too. So if
Yeah.
I'm talking my book a little bit, I'm pretty excited about that because that makes a lot of sense, I think, to a lot of people. So that's the company website. And on Twitter, I'm at Real Keith Weiner. That's KeithWeiner. There are imposters that have all various misspellings of my name. If you see one, please report it. I try to report them, but I think the scammers create them faster than I can go, chase after them. So follow me on Twitter. We're on a grand adventure here, hopefully to bring back the use of gold and silver as money, and not just bet on their price, which is economically sterile and kind of counterproductive. If you bought gold for the right reasons, you wouldn't want to sell it. Shouldn't
Yeah.
want to sell it.
Yeah, absolutely. Everyone watching this, highly recommend. Please go follow Keith's work on Twitter. Check out Monetary Metals. I'm going to put the links in the description below. But Keith, thank you so much for coming down, speaking to the precious metals community here. And as always, as the market develops, and I'm sure, there's going to be even more and more developments and news coming out soon in precious metals as the market moves. I'd love to have you back on in the future.
Sounds good, and thanks for having me.
Talk to you soon.